Joe is the Chief Commercial Officer of ABAX with a very rich background in commodities futures. So Joe, over to you if you'd like to add anything to that introduction. The floor is yours.
No, that's fine. No, thanks, Ian. Thanks again. Apologies for the problem earlier. I hope you can all hear me now. So first off, Peter, thanks again for having us on ABAX as a sponsor for the second year for the Wall Street Summit. And thanks, Ian, again for the introduction. Apologies for the technical issues earlier. So I did want to start off by giving everybody a bit of a background on ABAX Exchange, what our vision and motivation is for developing these new capital markets, futures markets, and then finally an update since we last spoke here about a year ago on ABAX and to answer any questions that anyone might have. So first off, on ABAX Technologies and the exchange, ABAX Exchange, we were founded with a vision on how capital markets and finance will be transformed by emerging new technologies in both trading and clearing. It's really important to mention that ABAX Technologies, the parent of ABAX Exchange, is a publicly traded listed firm trading on the Canadian NEO Exchange under the ticker ABXX and on the OTCQX under the ticker ABXXF. Also quite exciting for us, just a few short weeks ago, after raising about 70 million in private capital last fall, ABAX spun off Base Carbon Corp and listed it publicly also on the NEO Exchange in Canada under the ticker BCBN. Base Carbon's main mission is to invest in high quality nature-based carbon offset projects in both cook stoves and forestry. And if there's any further interest in that, you can reach out to me and I can put you in touch with my colleagues at Base Carbon. So early on in our development as a company and exchange and a marketplace, we recognized the real distinct need for in today's global commodity markets for not only better technology and financial infrastructure, but better markets to support the energy transition. And hence our move to develop a discussion with industry leaders on how we can create smarter markets. We believe that the entrepreneurs and capitalism in the markets can solve the world's problems faster than governments can, and that pragmatic market-based solutions should be used to solve socio-economic issues. So helping market participants to measure, manage, and realize the true economic value, both in costs and benefits, to a sustainable business model and markets is what we do. Well, we do believe that the pricing of ESG externalities is inevitable across all commodity supply chains, and we have experienced big tech follow that lead of, say, fair trade coffee, promotion of socially responsible mining, and carbon responsible LNG. There are three trends that we believe are changing the economic and technology landscape of global futures exchanges and commodity markets. First is the energy transition. The second is ESG investing towards renewable energy. And the third is a real distinct need for technological innovation in traditional futures markets. So on the first point of the new energy transition, global LNG, obviously, and everybody has seen this, the demand is expected to grow by over 188 million tons every year by 2030. LNG for certain will be a transition fuel for the foreseeable future. But lots has changed in the global LNG and nat gas market since a year ago. And hearing the state that the EU is in, we heard them state a year ago that they cannot get to net zero without natural gas playing a crucial role is obviously an important part of the new marketplace. The massive growth in LNG and infrastructure to more dynamic standards of trade has set the stage for us at ABAX to offer risk management tools in LNG and other important transition commodities that will assist in the move to cleaner fuels like LNG in the near term and further to fully sustainable and renewable energy sources along the road to the net zero finish line. Given the current global political situation, many believe that this will only accelerate the move to responsible energy transition. The second point, ESG investing towards renewable energy. ESG related investments are expected to grow past 100 trillion in US dollars by 2030. The problem with this is that investing in renewable energies is currently high risk for investors, high profile for investment banks, and is creating a lack of liquidity in the market for green energies. Financial institutions are now scoring their investments in firms by how closely those firms adhere to a strict ESG related mandate and adjusting lending rates based on that scoring. We need a distinct marketplace for capital inflows through derivatives like secure, regulated futures markets across LNG and carbon. And the third point, a distinct need for technological innovation in traditional futures markets. The problem here is that a lack of standardization in ESG scoring, reporting, and verification, and the actual true price or cost of carbon emissions and offsets makes trusted benchmarks difficult to develop and complex to track and trace. What is scope 1 or 2 for one firm could be scope 3 for another. Most current markets are relying on over-the-counter bulletin boards for trading of carbon offsets with little or no regulatory oversight on the product, counterparty or price risk management, and certainty of transactions. The development of regulated futures markets with certainty of risk management isn't a quick nor inexpensive fix. However, ABEX will be launching a new regulated futures marketplace for physically delivered commodity futures, including carbon futures, that will bring price discovery, price transparency, and economic certainty and better risk management tools to this important, well-needed market. It is an important point to make that this will not be just a lookalike of the current efforts to launch futures in global carbon markets. So we feel that there is an enormous opportunity to combine the energy transition with tech-driven solutions for ESG. Global exchanges, as I'm sure you all have followed, are the largest allocators of liquidity into commodity markets, but we really still need to develop the tools to manage that risk, develop more precise benchmarks, and effectively organize these markets. This isn't limited to just hydrocarbon and power markets, but has broader ramifications across all asset classes and commodity markets, including all the raw materials that go into the infrastructure required for pure renewable energy and storage. The recent volatility across all global commodity asset classes bears this out. We hear and know that market facts are telling us that government mandates and corporate initiatives are increasing to achieve global climate goals. The paradigm shift continues despite recent global events and is in fact accelerating in consumer behavior to more conscious consumption and sourcing of power generation. Demand in precious, base, and battery metals needed to support energy transition for the production of solar panels, wind, and other power turbines, and the distribution systems for that new power generation is growing, however, with the need for more sustainable and socially responsible mining of these products. Recent issues regarding certainty and security of supply of all these all-important materials only magnifies the need for better risk management tools. So our team at ABEX has been involved in building markets for decades. Most of us have either worked at global exchanges or in financial markets involved in exchanges. Earlier moves in the development of regulated environmental markets, however, were exactly that. Too early, but we know and feel that the time is now. Equally important is the need for more efficient and responsible use of capital. Today, the amount of risk capital needed to hedge risk in global commodity and carbon markets is making liquidity dry up and volatility increase. We heard this loud and clear from the many market leaders at the FT conference in Lausanne last week. We also keep repeatedly hearing that markets like simplicity for replication of trade, and that's where ABEX is providing leadership and will play an integral role in developing these markets. Our market and tools are designed to stabilize trade, making it more efficient to find liquidity in the goods that you need to achieve your business goals in a sustainable way, with a particular focus on the transition to sustainable sourcing of energy and metals. So why do we focus initially on carbon and LNG futures? In our work early on in our process, the market told us, and we agreed, that the global markets needed not only a better LNG benchmark, but one that included a responsibility factor. The physical LNG markets had told us you need a responsibly designed physical instrument where the exchange serves as the buyer and seller of last resort. Market participants have also told us that past attempts at a physical LNG futures contract or standardization in carbon futures markets were incorrectly designed with little or no success. So in fact, most LNG for many years was actually priced on non-correlated instruments such as Brent crude oil, the JCC contract, Japanese crude contract, and most recently JKM, a financially settled index instrument with little or no convergence into physical markets. Crude oil, according to one industry analyst, was pricing over 60% of all global LNG markets. So when you add the carbon offset aspect to this new and developing marketplace, we took a non-traditional approach for offsetting this complex risk. We like to describe it as not being or wanting to be the referee in the process, but rather the scorekeeper, and will support market participants, enabling them to integrate relevant carbon market offset solutions and markets to manage the proper carbon footprint of their respective LNG portfolios. We as a team at ABEX are working towards launching both our MAS regulated exchange and clearinghouse within this year. We knew when we started the project that it wouldn't be easy, but we also knew and continue to see a distinct demand for more efficient and more innovative markets, which is what we call smarter markets. So to close, IBEX is building smarter markets with new trusted benchmarks for price discovery that will capture the energy transition by launching a regulated commodity exchange for the global LNG and carbon offset marketplace. This new marketplace will improve business practices towards our common goals of meaningful change to these all-important global markets. So thanks again, Peter and Ian, for hosting this. Peter, thanks a lot for allowing us to participate again this year. And I'll stop there and look forward to any questions that anyone might have.
Okay, thank you, Joe. There are a couple comments which I'm going to read to you, and they're accompanied by questions. So let's see. So Adam Meltzer asks, or comments and then asks, LNG is an extremely dangerous fuel on many levels. There is limited support for LNG plants to be built anywhere near communities because of its explosive danger. Do you see investors supporting LNG as a solution to climate change?
I think that, as we like to say from my maritime background, that ship has sailed. I think that there is really, especially given the recent developments in the security of LNG supply, you see European countries now looking to book FSUs, floating storage units, for moving LNG into the European marketplace. There is, without a doubt, a demand for adding more infrastructure in the United States. I think you're seeing new projects looking to be financed already. And with that financing, there is a need for hedging risk. And how do you hedge that risk is through LNG futures. And that's where we see our contracts, both on the carbon side and also on the LNG side, being having distinct benefit for the marketplace.
Okay, thank you. Yesterday or the day before, there was a lot of talk also about crypto, blockchain, these kind of digital technologies. And Michael Zimmer asks, how does blockchain technology fit into the three trends presented in your business model for market development? If you'd like to address that.
Yeah, I think it will eventually play a part in it. For right now, we're going to be launching with traditional clearing, but we know that there are extreme inefficiencies in the marketplace. I'll reference the FT conference again that we were presenting at last week in Lausanne, and you heard from the CFOs and CEOs of the major energy and commodity trading firms that the inefficiencies between the OTC marketplace and futures are just so broad that they're causing volatility spikes and lack of liquidity. And how do you make that a more efficient marketplace? You use technologies like blockchain as a way to handle that. And I think given the technology background that all of our folks have at our firm, I think eventually we will get down the road. But for right now, the traditional launch will be the way we'll be going.
Mm-hmm. So you mentioned technology. Now there's another question also from Elizabeth Montgomery. And she asks, and this is actually very interesting because obviously as the amount of investment goes into developing new solutions, the pace of development is going to pick up. So it comes to her question, which is, how do you balance the accelerating building and then replacement of new technology with the accelerating energy markets? For example, investments may include electric lithium batteries, ion lithium batteries, and then afterwards you're going to go find other less toxic solutions to batteries. So how do you balance that? On one hand, putting in the longer term investments, stranded assets, versus new technologies coming down the road?
Yeah, I won't speak to the investments in mining. I'm not a mining expert, but I will speak to the need for risk management of those products, and the exchange from a regulated futures perspective can help mitigate the risk in those marketplaces. As you bring new participants in to that marketplace, they generally will not be able to trade bilaterally or OTC with each other, and that's where a futures marketplace can stand in as the buyer or seller of last resort, or and help mitigate the risk in those marketplaces.
Okay. So to a degree, you might have responded to this already, but I'd like to ask, how can you make carbon neutral LNG a commodity when there's so many different types of carbon offsets out there? And as a correlation to that, also, talking about what sets apart a high quality project, high quality offsets versus lower quality. And this is a theme that's been coming up throughout the conference as well. I've been getting a lot of reference, and earlier in one of the presentations today, talked about the use of points to determine what is the quality of a project and to create different levels.
I think the quality of the project is important. I think it's also important to note that as we develop our LNG futures and carbon futures, will allow the marketplace to associate those carbon offsets with whatever commodities we list on the exchange. So we're not going to embed them in there, which will allow for a better oversight of the quality of the actual carbon offsets themselves. I think the carbon futures contracts that we'll list will be of quality that the marketplace is already utilizing and comfortable with, and we'll have, obviously, as a regulated marketplace, the oversight from our risk teams and compliance and regulatory teams to make sure that the futures contracts and the offsets that they're based on will be of extreme high quality.
Okay. One last comment, and this was presented as a comment. The person wrote that they don't understand how liquefied natural gas, LNG, is used as a carbon offset when burning of natural gas is at least 20 times worse than the CO2 into our atmosphere, exacerbating the problem of climate change. It's more of a comment than a question, but if you'd like to maybe address the climate impact on them.
Yeah, I want to address the climate impact of LNG, but I think it's clear to everybody globally that LNG has to play a part in energy transition, and that's why we like to call it a responsible energy transition. And you hear it loud and clear across the global landscape that it needs to be an all-inclusive energy transition, not separating one from the other. We'll get there eventually, but in order to get to that point of low carbon or zero carbon, you need to have a bridge to it, and LNG is obviously the logical bridge to that point.
Yeah, and I think Dan referred to that as well in his presentation, that whether you like it or not, you're going to have natural gas, and you need to involve, and there are advantages to involving the petroleum industry. There will be those who will disagree, but it is what it is. So exactly. Having said that, if you have any final comments, and if not, then I would like to thank you.
No, thank you, Ian. And again, Peter, thanks again for having me. Apologize for the earlier difficulties.